I passed my funded evaluation today with one trade. I mean, I was working up to it, but we made $900. We passed the evaluation, and we're moving forward with it. And thank you guys for 2,000 subscribers. We're growing pretty quickly, but I've been putting more time into trading and relearning my strategy. This trade had 0 drawdown, and it was lunch. I was going into lunch for myself at school, so starting off the day, I'll just show you what I have. And I'm just going to go into what I learned from Kiss, because he uses the bodies right here for a more clean, pure version of price action, which you can see isn't as accurate, but the way I have it marked it is like this. You can see the wicks, but I'm going to try it his way. He taught me some cool stuff today. So, we have, you already know I think you know the drill, 930 open, mark out 930 open. What was our price action? Because I was bullish on the day, but I was watching our short setup form, and for my first trade, I had this inversion for value gap. No, not this one. I think we had it on the 3-minute, 2-minute. Okay. So for my first trade, we had this inversion for value gap on the 3-minute that I wanted to see hold up because we ripped up, pushed up for open, and we went lower. I'll also show you some quarterly theory things later too. Bearish for value gap, shift in market structure. So what's the most logical thing for us to do? We have an inverse PD array, which shows us price is kind of failing, and I had a limit set here, and I'll show you in the server analysis for the day. So pushing up higher, sell limit on this inversion for value gap. Oh, it was on the 5-minute. Oops. Same thing though, we had an inversion for value gap set up. We had the limit, it dumped, and I was too scared to actually enter off of OTE. But I'll show you what happened or how the trade played out and how we could have improved on it in the future. So of course I used the bodies for OTE. We ran up in, this isn't really OTE anymore, but we still ran up higher, pushed into this inversion for value gap that I had a limit order at, so we would have been filled. And you already know how my stops go. Stops, I mean threshold. And we would have been targeting out this low right here. So this is a clean 40 handle trade that I was not able to actually take. So this actually got me kind of mad during the day. And I took one loss trying to go short because I thought this was going to be in the redistribution. After we ran out this low, run up higher, tap into a discount more time, push these lows. But what did I do in that moment? My psychology, a little bit messed up. And whenever you're trading, when you have greed, when you have anger, when you're revenge trading, your analysis will be so clogged up, you won't be able to trade properly. Trust me on that. You will have almost no clear, you'll be tunneled in, just focusing on your P&L, and you will not succeed that way. You won't even get close. You'll wake up, see your accounts blown, and you'll have so much regret. You'll be like, oh, why did I do that? You're gonna get suicidal. Not me, but some people, I've seen it, they get really depressed. So, of course, we missed that trade. It's okay. Small loss right here. Now we push up higher, and this is our standard deviation. Higher time frame. We are bullish. Keep that in mind. Push up. We nail our second to 2 to 2.5 standard deviation and standard deviation projections. It just runs up, shows us where price will likely displace to. We can accumulate our first to 1/5, or we can displace through it, and this would be used as a silver bullet. So you can see we kind of did use it for value gap right here. Ran up higher, went lower. The first value gap we tapped into during our silver bullet macro was this one. Tapped me threshold perfectly. You could have caught a good long for, I'd say, usually you'd be targeting out like 15 to 20 handles. I like targeting 40. Let's see if we ran up to 40. Yeah, we did. Okay, yeah, we ran up to 40 handles up to the side. So if you would have taken the silver bullet entry, you'd be up 40 handles into our second standard deviation. And this is where you could expect retracement or reversal. So, as you can see right here, we had a good sell model again, because I'm getting back into the old way of trading. I'm trading market maker sell models, and I'm actually watching some private mentorship videos on the sell model, and I'm actually learning so much more. So I'll show you how this goes. Of course, run up this high, shift in market structure. Now all we need to see is a retracement into our discount of the range. So let's use premium and discount right here. Run up into a discount. What do we tap into? Well, we have this breaker block right here. So we have this breaker plus a fair value gap. This is a unicorn, right? And the unicorn, it's just a breaker block and a fair value gap. It's rare. The reason why it's called, what was that? Okay, the reason why it's called a unicorn is because it's rare. It occurs once in a while, but it's like seeing a unicorn. They're really rare to happen, and we had one right here. So of course, best place to put your trade entry. I always like to do the tap of these PD arrays, sometimes to do the middle, and I'll explain that more in depth. So for this trade, you would have done the middle of this PD array, and where would your stop be? Well, you want to scale up. You want to look at the higher time frame and look for your higher time frame order block. So looking at this, you can see it's really choppy, but where's our higher time frame order block? This right here. So we want to be targeting. This is a little bit unrealistic, but I like to draw a mean threshold of our order blocks and put it slightly above that. So we have this. Oh yeah, you would have gotten stopped out. So scratch that. You could have gone stopped out. It just depends on your risk adversity, I guess, for this trade. Where's some other key points we could have put it at? Because at this scenario, I don't want to put it this high. This is too much. This is too much. Yeah, that's too much. So it'd be rough. So this for value gap would be good. 9 handles. I'd never go above 12, so keep that in mind. Don't go above 12. So I guess 9 handles at the fill of this for value gap would have been good. But don't cover me threshold and price action like this. So I guess future reference, have it an open for value gap, not a breakaway gap, but an open one. Or we could have it right about here, because you can see how price reacted off of it. We went lower, push lower, and of course what would be our target? These lows right here. And I had this low marked out just because on the higher time frame, I'll show you. On the higher time frame, that was a separate low that I wanted to see revisit. So if we were going to be using a take profit right here, I would have wanted to see a price tap into it. And this could have been a good price objective, but yeah, we didn't take that trade either. My teachers are getting a little bit better, so I'm feeling a little bit better about trading. So I was trading my XFA because this was a really good higher time frame unicorn. So I had limits in, even though it was lunch right about here, I put limits in for buy. One on my eval off the tap right here, and another on my XFA with a way lighter risk. And I had alerts set up so price would tell me. So these were my two, what was it called? Trades right here. And I also had another one set up on a paper account, which I was just going to use that for signaling. But and my target, these equal highs. So 75 whole handles. Imagine targeting 75. That's some stuff I used to do. So of course, XFA, eval, and I passed the eval. So I'm tapped in right here, and I calculated risk. It was going to be 1,450 for this full take profit, which had me just a little bit salty on the day since I didn't get filled. But overall, I think boxing more is helping my psychology and getting me back into more of a clear and motivated mindset, disciplined, I guess. So tap into it, run up higher. This is federal member Wallen speaking, because I've seen him do a number to the market multiple times. So at 1, rushed up higher, pushed lower, still haven't gotten stopped out. At this point though, my stop was at break even. So when this happened, of course you want to manage your risk. Stop at this low. So your stop loss goes to this low, you just trail it, because why would price revisit this low? We're not going to sweep that out. If we go past this, we're going to dump. So then I followed, and I looked for fair value gaps that have already been filled on our way up. Those are also really good reminders or places where we could put our fair value gaps. But I ended up exiting a little bit above this high. Once we rushed through this high, I was like, I can pass my eval. This is all the money I need. This is all I need. So boom, eval pass. It was a struggle because I hit max daily lows. Yeah, it was a struggle. You'll see. But ran out equal highs, and yeah, pushed up higher sell model. One more thing I kind of want to brush up on. I'll show you. Not this one. I had the wrong one. But we have Day's quarterly theory, and Kiss Prince, he's in my server. He has his own server too. He called out a really good trade that I think I can teach you and show you guys quarterly theory with. So get rid of this, use a microcycles to, even though ICT doesn't subscribe to it, I like to see how it works. So let's find maybe like last minute of trading for market. It was right here, yeah, it was on this long, and let's go see the historic cycles, because it's not going to show up. Oh, it will. And I'm just making this for future reference, I'm not trying to go too crazy. So, accumulation at this high, when our accumulation for quarterly theory, so boom, accumulation, we run lower, we sweep out this low for a manipulation. I'll mark it out in this way so it can make sense to you guys. Boom, boom, boom. Just get it all out. I'm not going to do the AMDX thing that most people do, but you can see in this time, we run out these lows, so we push lower, and now we're in our distribution phase. So what are we looking for in our distribution time? Well, after sweeping out this low, manipulating lower, of course we want to be seeking higher prices. So we look for a bearish fair value gap to fail, and that would be our entry. So this was me and Kiss's entry, and a few other people. I don't know who actually took it. So we buy here. So boom, inverse fair value gap, you just respect the rules. I guess stop at this low, 190. How much handles is this? 9 handles? Okay, that's okay. And what would we target? Well, we could use our handy dandy friend, standard deviation. So boom, boom, we're going to do it the way Kiss did, and we could target our first standard deviation. Okay, so this would be a good target for us to target out. First standard deviation, 340. That's okay. And then we trail our stop loss with this. So, trades placed in. I had this too, and it's actually working. So boom. Oh, a little bit of drawdown. Let's just do something else. Don't let it bother us. Don't let it affect us. We're still in the trade. Wow. run up higher, push up, first standard deviation tagged, instantly reject off that zone and start pushing off lower. That was one good trade. I think entirely it was 23 handles. It's good for end of day too. I want to start incorporating this a little bit more and start teaching it because I feel like I don't want to get dried out as like an MMXM creator. But I feel like it's a good model for beginners. But we have to get more into this. I said I'd teach it in the future because I used to use it a ton with Surdy and DXY, but Surdy kind of left me, so that's whatever. Price accumulator for us. First take profit was hit, so we were pretty happy about that. I was just happy I learned something new with it, and using inversions instead of the distribution phase was also pretty nice. I never use that, so push that aside. We don't really have much else to go over. I don't want to trade XFAs. I'm gonna probably trade micros on the new one, but that's about it. I'm gonna chill out for a bit because I don't want to be trading minis unless I have an A plus setup, but that's really rare to come by now. So DXY isn't correlating, which kind of makes me sad because it's usually a confluence. Let's just see if we have any type of correlation or synchronization. Accumulation then higher, accumulation then lower. I mean, that's kind of what I like to see. Then return, yeah, it's not really correlating the way I want it to. Especially if you see the hourly, we're accumulating, pushing lower, accumulating. I guess we are kind of because we're pushing higher. Let's check out EURUSD because I was supposed to check it out, and you could see EURUSD is actually really clean, run up above the high. I wanted to start trading EURUSD. I don't do what was it called analysis anymore. Oh yeah, this is clean. Look at this. This is what time is this? 9:15. So going into the day in EURUSD, we had a buy model. I was thinking about trading this, so there we go. You can consider this 3 drives. Run below this low, push up. This is our shift in market structure right up here. And you do not need to close above for a shift in market structure. Price is this manipulation leg lower and we push up once above the high. We are good to start looking for a long. So let's scale down, and even though price looks so bad here, I should go to like the EURUSD chart, see if there's anything on it. Because I think the futures contract is messed up. Let me go to the Forex. EURUSD. Show me. Oh, F. What have I done? Oh, goodness me. Euro FX dollar. Yeah, price looks clean here. Okay, so yeah, I'm probably gonna do my charting on here, and then the rest of it will be up to my trading on the contracts. Is this really Euro USD? Wow. Okay. This was a while ago. I'm just looking at the charts. Let's see if we had a setup today, though. I didn't know. I'm sorry. I should have been looking at the Forex pair because I'm kind of new to Forex. What is this? No, it's Tuesday. Okay, I'm discombobulated. Boxing might be doing a toll. So you can see we obviously had 3 drives at this low. This is already a good sign for me to enter. Run up higher. Market structure shift. Now we're just looking for a run lower. So I'm keeping this price point in mind. Let's see what we have. Well, fair value gap. Inversion fair value gap. First sign you want to be looking for a long. Right here. And let me fix this. This isn't even my tool. Okay. Boom. Run into this inversion fair value gap. Stop. Maybe me threshold entry off the tap. I don't really know how lots work, so I'm going to have to do it, but I might start giving analysis only off of it. And just a slow push up higher throughout the day. Of course, you want to be targeting out this high. I kind of want to use standard deviation and see how that works on EURUSD. Let's see it. Okay. Yeah, run lower, so swing low, this swing low to this swing high. 2/5, run into it, retracement. Of course, we want to be targeting 4th after we see that. 4th standard deviation right here, final take profit. 5th standard deviation could have been our max expansion take profit, but I don't think we hit it. We did throughout the overnight. I probably wouldn't have held for that. This was good enough because this is a 1 p.m. Federal Member 1. I'm gonna see my risk reward on this trade because going into open, if I saw, oh, this isn't even open, so it's kind of unrealistic. I'm just yapping, but yabbering. Okay. Oh, perfect. Mitigation block plus thing. This isn't a unicorn because it's a mitigation block. We did not take out this low or these lows, so this is not considered a breaker. Still a mitigation block. My favorite entry model. Not my favorite. I kind of lied about that. But looking at hindsight, we're already in a buy model. We swept out those lows. Stop right here. Stop. Our entry is always off the top of a mitigation block, and I draw it out in a peculiar way. But at the end of this fair value gap is probably the safest spot. And after seeing this retracement in 2/5, of course we want to be targeting our 4th standard deviation next, because we're already pushing past that. That's our next logical target. Not previous liquidity, but 4 standard deviation, nailed it. 7.5 risk to reward, but yeah, I think it's pretty clean. I don't really have much else to go over. I think I dumped good value in here. Well, I could, but hope you guys have a good night. I'm gonna see you guys tomorrow. We are gonna tear it up, or at least try to, being the most patient traders, taking the best setups we can find. Have a good night, everyone.